bulk of the market momentum has been added by the small cap and the mid cap category. So let's welcome on board a management of one of those small cap companies. Aurionpro Solutions is the stock on our radar, and the reason why we are talking about this counter is the fact, if you look at the YTD performance of Aurionpro, that stock has nearly become 3x. It was trading at what, 200, 250 levels this time around last year. Since then, it's seen a massive rally. The stock has become 4x. And recently, in the last week, there was a marquee investor in the terms of Malabar India that checked into this counter. And yesterday itself, the company has approved a preferential issue to Malabar further, and they're going to issue it at a price of around 880 bucks. So we thought, why not welcome the management on board to try and understand what the business is about and what the prospect is looking like. Mr. Ashish Rai, the Vice Chairman and Director at Aurionpro Solutions, joins us on the show. Ashish Rai, thank you so much for making time and speaking with us. First up, let's begin with the basics. Since we are speaking with you for the first time, help us understand the business dynamics. What's the USP? What kind of P&P solutions do you provide to the BFSI vertical?
Hi, good morning. Thanks for having me. So look, we are building out a global IP-led product and platforms player. I mean, Aurionpro has been in the business for some time. We are actually in our 25th year. About 3 years back, we started a strategic pivot, moving largely away from commoditized services to a very sharply IP-led business. The goal is to build out tier 1 products and platforms in a few chosen spaces. What are those spaces? Banking is one, where we got one of the leading loan origination solutions in Asia. We got solutions in the transaction banking space. The second is transit, so smart mobility, where again we are fairly prominent in India, as well as increasingly making inroads in US, etc. The third is payments, right? So we are building out what we believe is globally competitive tier 1 IP, focus on hard R&D, focus on building products, and take them to expand out in the globe. So that's essentially who we are.
Thanks, Ashish, for that backdrop. And your track record so far, right from 2005 to 2023, has been quite impressive. The revenue compounded annual growth rate has been 26%. But do you see this run rate to be sustainable going forward as well, given the base has also become heavier?
It's great that you bring that up, right? So we IPO'd in 2005, 10 crores, 10.5 crores then. So you're right, we've compounded at 26% for the last 17 years. I don't see why we can't do that long into the future. So as a management team, our goal is to keep growing at 25 to 30%. We are in segments which we carefully chose, where we believe the demand runway is very, very long. So for example, transit transformation from closed loop to open loop, we believe is a multi-year, if not a decade-long runway. So very long runways. We believe the leadership is contested globally, which we can make a play for, and we've got absolute cutting-edge IP to compete in those spaces, right? So I don't see why we can't keep on doing 25 to 30% for a fairly long time. That's what we hold ourselves against, right?
Right. The other thing, Ashish, I also want to understand is, what are the growth levers that you see for the business? Is it going to be the smart mobility business, or would it be BFSI?
So we have, Aisha, 4 large bets, right? And we are playing sort of equally strongly in each of those. One is transformation in the corporate banking space. We believe where the world is headed. There was a lot of digital spend that went on the retail side. The current high interest rate environment, I think, is fairly good for banks which run large commercial loan books. So we see a lot of spend in that space. So that transformation in the corporate banking space is one. The second major is the transformation in the mobility space. So what I call smartification of mobility, right? Move to account-based ticketing, move to open loop payments, move to QR-based ticketing. We believe that again. So you got 2 parts of the world, right? So you got the Western world, where there's a lot of legacy closed loop tech which will move to open loop. It won't happen tomorrow, but it will happen over the next few years. For example, we won this global RFP out in California. We're already rolling out in 5-6 cities. Lots of success in Central America, Latin America. So that's the second major bet. We believe it will be big. The third major bet we have is a whole group of platform services, which is a bet on digitization of India. So we have very, very focused services where we believe there is gap in the market that will again be enabler to the multi-decade journey we see in India as it becomes larger and larger. And the fourth major bet we have is around sort of licensing our technology to other technology providers. Again, we're working with very, very large global players where, for example, we announced this, one of the largest trade finance solution technology provider in the world. We've co-developed a solution. Again, a number of large players, right? So I think those four major bets, we see long demand runways for each of those. That's how we very, very carefully chose it. We methodically went about sort of deconstructing our business and then rebuilding it back up to play in those spaces. We are seeing some success. As I said, the last 2-3 years, I think we've grown very strongly. So there is some proof points, but the goal is to really go and contest for leadership. That is a long journey. Time will tell how the bets work out, but I think so far so good.
But Ashish, in the very near term, with all the gloomy talk around, tell me, what's the order book position like? How's the pipeline? Any concerns there?
Yeah, so we published order book position as of end of March. That grew quite strongly for us. So end of March, it stood at 820 crores. Typically, if we don't have any capacity issues, we should be able to convert about 80% of it this year. So we've been guiding to a 30 to 35% growth this year, which the order book will support very, very well. Pipeline. So we hear a lot of talk about recession in the Western world as much as I think you do. We don't see pipeline is very strong. So we don't publish a pipeline number because there's some very large deals which I think will be misleading. So we don't publish pipeline number, but order book is strong. Demand is fairly strong where we are, and the spaces that we play in, right? So a high interest rate environment. So I suppose it's bad for if you needed M&A fees, the investment banking side of things and all. But for a large tier 1 corporate bank, who's our target segment, running a large loan book, I don't think a high interest rate environment is necessarily bad. So I think we actually see a lot of spend going in terms of transformation in that space. Same thing with transit, etc. Right? So if there's a large global recession, I suppose it will affect everyone. But
Sure.
At the moment, we don't see anything.
Okay, at the moment, no headwinds as such, but you have also received an in-principle approval to set up the payment aggregator business. Could you talk to us about what's the strategy here and who would be your direct competitors?
So look, it's a payment aggregator business. So I suppose, we just got the in-principle approval. We're setting it up. You can probably look at the entire digital payments market in India as if you said competitors, but our goal is to really work on the next generation of digital payments in India and operate in spaces where we are very, very sharply focused. For example, transit is one of those where we play very strongly in that space, and of course there's a digital payments layer there, and other areas where we have an edge. So the goal is not to really get into the commoditized end of the market, but be very, very specialized around things like transit, things like B2B payments, etc.
A quick word. I was seeing you in your presentation. There have been a lot of acquisitions and divestments as well that you've made in the past. Is that the strategy of the business? Incubate, scale up, and then sell off those assets, or how do you work with respect to your divestments and inorganic acquisitions?
So there are two ends to it, right? So I think divestments were a part of refocusing the business. So as I said, we went about deconstructing the business and sort of methodically constructing it back, simplify it to focus on a few spaces. So for example, we thought, the IT services margin generally, is going to be very, very challenged, probably going to zero, whether it's structural cost issues, whether it's, AI, whatever else. So we said, okay, we don't want to be in that space. Similarly, cybersecurity in the US. So we divested where we thought it was no longer the focus of the enterprise. The acquisitions, on the other hand, is a different story. So the way we look at the game, we are not trying to sit inside a box which says I'm a software player, or I'm a hardware player, or I'm a services player, or I'm an operations player. What we are saying is we will choose the spaces, we will see what the value chain is, and we'll go and occupy every point in the value chain. So if you look at transit, for example, we are building out what we believe is the most integrated end-to-end offering in the space, from the hardware in the form of validators to even the gates, to the payment stack, to the software, AFC software, etc. behind it, right? So play the full value chain, because that's how we see the customers buy, and that is our way to generate the the margins and the earning power. Same thing on the banking side, you go from software to cloud, and so basically again build it the way the client buys. So I think for us, the focus is we are a tech player. We'll focus on the value chain. We'll focus on occupying every point of the chain and try and be the most cutting edge, most efficient player at every point in the chain, and that is what will give us a competitive edge. That's basically the insight we had when we rebuilt the strategy. And then to do that, we will acquire. So we will acquire for tech. We'll acquire for capability. We rarely acquire for revenue. Actually, I don't think we've ever done that. For example, we acquired SCSoft in Singapore for the transit tech. We acquired Toshi in India to build out the hardware side of things. So acquisitions is for us to backward integrate into the value chain and sort of finish off any tech gaps that we have.
Okay, Ashish, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thanks for having me. Thank you.
Okay, that's the word coming.